So Scott, first of all, congratulations. I just heard that you just got the new VAR license today, which is a big milestone for Tokinvest. Can you share with us, what is your view on the tokenization landscape in the UAE and what's the market outlook in the broader region as well?
Yeah, look, it's a really exciting time, and thanks for the well wishing. It's a big lift to obviously get the license, and we're privileged to have to now have that honor to actually do it. Real world asset tokenization is a topic that really people have been talking about for a number of years now, and we're about to release some thought leadership on where are all the tokenized assets. And the real barrier has been regulatory, a lack of comprehensive, clear regulatory frameworks. Now, the reason we're here, the reason why we've set this business up in Dubai is that we now have the regulatory clarity under the VAR framework. And so I think there's a huge opportunity now because asset owners and issuers have been wanting to do it. People, investors are looking to try and get access to digital representation of real world things in a way that's more transparent and accessible. And what's been missing is this regulatory approval piece. So we think the outlook is enormously exciting for not only Dubai, but also the region.
So Scott, I would love to ask you about the market size of the tokenized assets right now, and what is the potential, in your opinion, for the next 5 years?
Yeah, well, 5 years is great because there's a lot of commentary around, where this industry is going to be between now and 2030. And, you can find a range, but somewhere around about the $10 trillion mark is what a lot of forecasts. There's going to be $10 trillion worth of investment products on chain in the next 5 years. Now, what's really interesting is when you look at the size of the market today, it's only about 200 billion. So There's an awful long way to go between now and there to achieve that. And so I think what we're going to see is a real acceleration of assets going on chain and the associated economic activity that comes with that. So, they're not my forecast, and you can find bigger and smaller ones, but the market, is indicating that kind of size of opportunity.
But Scott, what do you think is needed to hit that 10 trillion or similar amount? You think it's better education? Is it regulatory clarity? Is it more awareness about tokenization? What do you think will be the catalyst to hit those amounts?
For us, it's about product. We've seen some examples of tokenized assets, tokenized financial products already. But when you look at really what's going to ignite this, what's ignited, the industry, from crypto to NFTs to meme coins, what's actually ignited it is people who are interested in participating. And so for us, this is about creating great product. And so a lot of the focus, not only doing our regulatory, approval process over the last year, but has actually been about designing products that people really want. What are the types of assets that people would love to invest in but either can't because they're too expensive or they're not allowed to buy them for regulatory or other reasons? And so for us, it's about making the right product available to the market, and then actually the market will take off.
So when you look at the landscape for tokenization, to what extent do you believe that it's actually improving the liquidity and in this realm, in this industry?
Well, we don't honestly know yet in some respects, in a sense that there isn't a lot of real-world assets out there, with a few really interesting exemptions will probably come on, exceptions, and we'll come on to some of those. But in reality, liquidity will come when assets get created. I think what's happened in the market is everyone's talked about, we're going to create liquidity, and we've seen lots of alternative asset exchanges get licensed and set up. And then there's been this, but where are the assets? You can't have liquidity without assets. And so it's been this chicken and egg problem. And we've been, for a number of years, now really focused on how do we bring a tokenized financial product, structured product to market so that people can actually buy it. Now, until you start getting the assets on chain and the people buying them, then you don't have liquidity. So it's a two-sided street, this. But what we've seen with crypto, what we've seen with, other assets on chain is that liquidity has followed the assets and the accessibility to those assets. So we're very confident it'll come.
Well, let's talk about liquidity. Obviously, one of the success stories we've had on tokenized assets has been U.S. Treasuries. And over the past years, we thought it was going to be real estate. We thought it was going to be units of funds, but it turned out to be literally treasuries on chain. Were you surprised of this? And why do you think this is the product that people are asking for and that has had so much success recently?
Couple of reasons, I think, and we've done a lot of analysis of, let's use the Biddle Fund as a bit of a thought experiment here. It's probably the most successful tokenized treasury at this point. So we think there's a number of reasons. One, it's a relatively simple structure, and it's a structure that we'll be using as we do bring some more interesting asset classes from our point of view, the likes of real estate, to market. But effectively what's happening is it's not the US government issuing a digital treasury. It's someone, in this case BlackRock, turning up and acquiring US treasuries and then issuing a digital representation of that asset. And that's a similar structure to the one we'll be using for a number of other products. And so that's relatively simple. The benefit here is you now have the ability to get exposure to US treasuries in a digital format. And there's obviously that once you're in digital, as we know from the crypto space, staying in digital, and it's why stablecoins have been so successful, is it's a hedge back to dollar without having to come back to real dollars. And so it's kind of equivalent. And you're seeing institutional adoption and wanting to get exposure to treasuries in short-term ways. Now, this is a yield-generating product to treasury, but institutions can come in and maybe park money overnight and earn treasury for 8 hours before tomorrow morning in an asset class. And because it's instantaneous settlement, that's why I think it's attractive. I guess one of the differences from what we'll be doing rather than what's, say, happening with Biddle is, the access to that product. The Biddle fund at the moment is a $5 million minimum ticket to buy, which is great if you're an institution and wanting to park large amounts of capital for some short-term yield generating. That's a fantastic thing. But we're really focused on how do we actually open that up to many more people who don't just have a $5 million minimum to buy into a product.
Liquidity.
And so that's what we'll be able to do.
So there's a lot of focus about blockchain and what does it mean for the different financial institutions. In your opinion, how is blockchain also causing shifts in tokenization?
Well, I mean, it's the enabling technology. I mean, a lot of our platform does not require you to be a Web3 native or a crypto degen. And we think that's really, really important because providing access to investment products, whether they're referenced to real estate or funds or commodities, and these are some of the products we'll bring to market. If people need to be Web3 native, well, you've shut out an awful lot of people in the world for starter. So in a way, the technology on our platform has disappeared, and it's a very Web2 experience. It's got an integrated custodial solution, so there are none of those horror stories about losing the laptop with the private keys on it, and the cyber risk issues have been managed through the technology. So it's a really important piece of the puzzle in that it enables the fractionalization of rights into a small digital thing that can then be moved between people. But in a way, the technology has to disappear, otherwise it's too much of a barrier to adoption. So that's been our approach.
We're talking about barriers to adoption, but what about suitability? Because obviously now you're able to sell tokenized assets to the retail public. How do you think we have to approach suitability when it comes to such assets? Should we look at it differently than how we do it for traditional assets? Or we should follow the same playbook that we've had for many years?
Really interesting question. I mean, I think all of the key things that we understand from traditional financial investor protection regulations, etc., compliance, all of those things still apply. And that's obviously a big part of what we've been through with the VARA licensing process, and it's a big part of our operating requirements. So it is essential that these investor protections, exist. I guess the opportunity, though, is then to give people products they want. The really big difference, and you mentioned the word retail a couple of times now, and this is important. Retail access to financial products is quite closely controlled in many jurisdictions, if not banned or prohibited, or it's a difficult thing for retail to access. So, we now have this unique opportunity to bring products people want and can access them. And for things like real estate, we're really excited about who can afford real estate today. Well, to buy a whole one, you need to be relatively wealthy, which is great. To buy a financial product in the TradFi world that happens to have real estate interests in it, you tend to have to be relatively wealthy and accredited investor. So what about the rest of the people? And so this is the opportunity now really to democratize access to these products through this new technology, through this new regulatory framework.
Very, very exciting times on that, Scott. Once again, congratulations on your VAR license. That was Scott Thiel, the CEO of Tokinvest. Thank you for being with us, Scott, today.
Thank you.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.